You've been out there saying this is not a trend. These are shock events. Are you still so optimistic?
Look, I mean, in my opinion, you sort of need to put goalposts around in terms of demand. Right now, I think the street's almost writing off the March quarter. What does normalized demand look like June, September, December? And that's why when I look at our core names, the Apples, the Microsofts, a lot of the FANG names, cybersecurity, cloud, to me, we continue to believe these are buying opportunities and you navigate the volatility. I view it as you look upon what a normalized spending environment is going to be. And even if they stress test the models in terms of an economic downtick, right here, you buy Apple, you buy Microsoft.
Uber ending the day down almost 10%, Lyft down almost 12%. These are names that you think might benefit if people don't want to take public transport. How bad is it going to get for them?
Yeah, I mean, look, I think you have to almost separate and tack from a risk profile. I mean, I look at names like Microsoft, Apple, some of the cloud cybersecurity names here. These are names that I think I view as golden opportunities for the next, 2-3 years. When you look at Uber and Lyft, right now, guilty till proven innocent stocks, just given exposed to global travel, and obviously that's going to continue to get gut punched across the board. Now, look, Dara and team came out and said not seeing any changes. Profitability is still going to be there. But right now, those are going to be very volatile names. Still like them long term, but in the near term right now, there's really no floor in terms of where their stocks should go.
Is there any specific name that you are particularly worried about? I mean, look, we don't know. We can look out to June, we can look out to the fall, but honestly, we don't know what's going to be happening at that point.
Yeah, I mean, look, that's why I think when you look at, let's say, security, like cybersecurity, you kind of have to separate out between some of what I view as like the non-essential purchases versus what you need to spend on. When I look at names like, where like a Fortinet is in cybersecurity, I look at names like a Zscaler or Varonis. Those are names that to us are essentially even a stress test model. You look at some of the non-essential purchases, especially out of these private companies, maybe that are going to struggle. I think also it's going to form what I believe is going to be a surge of M&A across cloud and across tech over the next 3 to 6 months, given some of the valuations we're seeing.
Where are we going to see that M&A? And are people going to be making big buys right now?
Oh, I firmly believe if we sit here 4 or 6 weeks from now, we've already seen a handful of M&A. Because right now, in terms of corporates, look at Microsoft, look at Google and GCP. You look at IBM, and you go really across the board in Adobe. I think right now they're continuing to look to expand their cloud sort of empire and expand. And if you look on the private and public side, a lot of these stocks that are now down 30, 40, 50%, look at the valuations. That's why I believe strategic as well as financial buyers are going to be putting sort of the floor in on software over the coming months.
So if there's one company you think that's best positioned then to weather this, which would that be?
I mean, to me, if there's one front and center that sticks out, it's Apple. Now, and obviously right now exposed to the supply chain, it just comes down to the math. 925 million iPhones worldwide. 350 million of them are due for an upgrade. It's a 5G super cycle. Does that get pushed out 3 months, 6 months? What does March quarter look like? More questions than answers. But if I look long term, that continues at these valuations for long-term investors. That continues to be the name that, to me, is the one that sticks out in terms of the themes and where we think it's going to play, even if you stress test the model in terms of the valuation where it is today.
But, and this is me being devil's advocate here, the iPhone shipments dropped 60% in China last month, and China is a huge market. What about that?
No doubt, and that's why right now the March quarter in the street's eyes is really going to be a write-off. It comes down to what does normalized demand look like when China gets back on board in the second half, and the supply chain if it gets normalized by early May. And right now we're tracking there. So when I look at Apple, I really look at if you believe fiscal 21 numbers are firm, then with both fish you're buying the stock. So I think it really comes down to the near term. No one could predict what's going to happen tomorrow, let alone in 3 months. But if I look at 6, 9, 12 months, and I look at the fundamental story of Apple right here, I
Okay.
clearly own that name.